Welcome to TradeTheNBA.com. This is John. This reports for the 18th. Well, as we reached the peak here, we started to see the crossover that was going to suggest some weakness, but the cyan faded just a little bit, so the downdraft wasn't as extreme because you had that failure of shorts to activate, and you actually got a little bit of a green crossing developing along that path. Again, we talked about this. Pretty straightforward. Was the ABM yellow at 90. That was the benchmark to go with above and below from a short standpoint below, and to the longer side from above. It was still back and forth within the overall trading day, even though the range was narrow. What we're seeing is kind of that we had the same situation happen the last time we had this development with the cyan breaking up, and that where you kind of get these back and forth days before you end up getting bigger drop, particularly if it stays within that. Now, if steel is able to dip below the red DOC, then we could have a reset even at the peak. So, but for now, still some expressed weakness within this, and it's easy again just looking for it. And we had a really excellent intraday ranges. They were all over the place, which just made for some nice swing action trades. Of course, you have the potential Brit exit deal, which was really what caused the impetus for a lot of positive movement. Whether that will actually pass this weekend, that's a whole different story. But they had to get it done now because there wasn't going to be enough time if they waited. So if this doesn't work out, there really isn't enough time. So we'll see if they just pass another extension. This is certainly going to bolster the euro, which actually helps the U.S., and here's the euro. It's been taking off from there. We talked about the need to get to that 50%. Last time it hit it, had a tough time, but as the positive news for the euro was building with the Brit exit situation, boom, that's a massive spike. So we can see that building all along, and so there were some optimistic players that started a lot earlier in getting ahead of that euro trade, and plus some people have been dying for the euro to bounce, particularly the Fed. They really want to see it because it definitely would help the U.S. It's causing a bit of oil spike, not much. This is still just in limbo. We've had this soft rise within a bearish confrontation of cyan above green and no steel reset. So this is going to be range bound still, which is fine. It's healthy. It keeps gas prices low. No one can complain about that if you're looking for some reason to be optimistic. Gold not going anywhere. So there's, the tensions have all been eased. There was ceasefire with the Syria thing, so there's not going to be any added conflict this particular point. So from that standpoint, it's just more noise, and as long as nothing's getting done, because as we saw, completely polarization between President and Congress, nothing is good for the market. It's always been a positive. So we ended on a weak signal previously, and going into Thursday's action here, we were soft, but then this is a tougher one because you end up with the green moving above, steel crossing the cyan, orange dipping below, but never from a reset. So I wasn't expecting this to have extended legs, but that was part of the Brit exit thing. And once we got above the 94 range, boom, it was pushing right up towards the 308 resistance point. And even when we had the DOC spreads, you knew they were short-lived because of that steel coming. No reset going back above and then below. It finally took place right here as this buy momentum took place. So by the time we got over to where the BK reading started to come in here, you had similar setup. You had the cross earlier, and then the DOC spread was a little late. So I was like, okay, I really would like to see another version of it. Of course, we had the ABM yellow, which was right there. And so when the DOC spread, this one, which was textbook clean, then we actually got the big move, and that was a nice downside run. And what was beautiful about it was we had the dip below the red line, so the pop only suggested that it was just a matter of waiting for the inversion where cyan moves above, and you knew that the target would be that dip below the red line, which was basically the lows. It actually hit those lows, made slightly new ones, and created the new reset, which actually produced decent little long from the bottom there. Again, tough with no reset because this is still within a broader short configuration, which doesn't change till all the way over here before we even get into the final run before the end of the day. And then DOC spread started right there as the cyan faded. The green faded, cyan rose, and you didn't have the steel coming up above and below. It was just caught in the middle of that, so really wasn't expecting a ton from this. Just to come back down to this previous low point, which pretty much filled that one right in there as we dip down, and now we're sort of in a soft in between. So the ranges are still good. This is plenty of points. It's just a matter of they're not getting a strong directional move at this particular point because of the soft daily readings. We'll just take it as it is. Nothing wrong with these kinds of nice swing moves. It's just a matter of staying with it and going with the readings as they come in, and they present some nice little nuanced conditions, but it's much easier when you can read this construct of broader weakness and recognizing that you're going to get your short pops when you get that steel rise back above, and that it just fades back down again, and particularly the stronger one where you have the cyan moving above the green and green dipping below red always has a little bit more oomph to it, and it's playing out beautifully. So we'll just keep going with it. As always, though, if there's something unique, I will certainly put it up. Trade well. We'll talk to you later.